In August, the IRS came out with new regulations called the broker-dealer regulations, which in them include new rules for how taxpayers will report their crypto income. And the new rules require basically, how do I determine what coin is sold when I sell a coin? And many people use online services to calculate this. But the IRS has come out with new rulings on how that is to be done. And this is a massive reversal of prior guidance that they'd given back on these FAQs that they gave out in 2019. So the IRS is now contradicting prior FAQs. So this is very important. It will affect every crypto trader who's been reporting their crypto income and their taxes. The IRS new ruling requires that gain calculation be done using a FIFO, first in, first out method, and that it be by account. And the difference between by account is contrasted with a universal approach, where the idea is when I sell by account means if I sell a coin, I have to sell a coin that's in that same wallet. Okay, so I can't pick a different wallet. So that's by account. Universal approach is when I sell a coin, I basically treat all my wallets like one giant pool, universal, and I can basically consider anyone I want out there when I decide which one I'm selling. All the gain calculation services use universal. They all use universal as their default method. However, only 4 of them currently support a by wallet approach. So the other 4 can certainly modify their code, but it's going to require a significant rewrite for them. It'd be interesting to see if they can financially survive on that. Now, the issue and why this is important to you is that the IRS new regulations, that when they go back and calculate your gains in prior years, they're going to look and do it on a by account method. And the reason they can do this because they interpret section 1012 subparagraph C1 of the tax code as applying to all assets, including cryptocurrencies, that you have to sell it by an account by account method. What's the impact on you? Is this going to cause you to have lower taxes or higher taxes, right? Well, the fact of the matter is, when they go back and recalculate your gains, your prior year gains are going to be substantially higher. Here's why. Typically, people would use a FIFO method or minimization method when they sold an asset. So let's say you had an asset that you bought at $10,000 and the price went up to $40,000 when you sold it. You held this for, more than, so you had a $30,000 gain if you choose to sell the $10,000 asset. But let's say you also bought some cryptocurrencies when it was $35,000 for the total cost. The FIFO method say, I'm going to sell the ones at $35,000 because I'm only going to recognize a $5,000 gain, and therefore your taxes on your tax return are lower. And this is pretty much how most tax returns have been done. But when you switch over to the FIFO method, IRS is going to go back and say, no, we have to use the $10,000 one, which means you actually had a $30,000 gain, and you only reported $5,000. Therefore, we're going to hit you with a $25,000, a tax on an additional $25,000. Plus, we're going to hit you with penalties for underreporting. Plus, we're going to hit you with interest for prior years that have not been paid on a timely manner. So it gets ugly fast, and that's just one simple example. All right. So what the IRS has done is they have released something called a revenue procedure, which allows people to transition to the new method of accounting for cost basis. And it works this way. You have to adopt a method that you're going to map the unused cost basis at the end of this year, 2024, and map it against the real crypto assets that you do have. So it'll be like a one-to-one mapping. You're basically going to draw a new line, a fresh start, and establish on paper the cost basis for your existing coins. Then going forward, when you're doing your taxes for the 2025 tax year and onward, you don't import any of the prior years, nor will the IRS go back and revalidate the audit. So this is the big safe harbor, as they call it. If you don't do this, you're defenseless. You're going to be crushed for penalties in prior years and your calculations for current years more likely than not will be wrong as well, and you'll have penalties and taxes on that going forward. It's just, there's absolutely no reason why any crypto trader shouldn't sign up for a safe harbor allocation plan. Otherwise, you're exposed for wrong prior calculations. Now, these services, Token Tax, Zen Ledger, Coin Tracker, Coin Tracking, Coin Ledger, TurboTax, Crypto Tax Calculator, Coinly, they all operated on the guidance that had been given from the IRS, but the IRS is now contradicting it and distancing themselves from it. I'm sure somebody's going to figure out a way to challenge us in law, but when you go to court, it's because you've already gone through an audit, so you don't even want to have to go to an audit. So the best thing you can do is take advantage of this transition plan the IRS has. And you know what? The IRS wants you to take advantage of the transition plan. They don't want to go back and look at all those old transactions. It's complicated, it's messy, it's ugly. They would like you to start a new baseline. And I'll tell you this, there's everything good about this baseline. The IRS is basically saying, we're not going to audit your baseline. If you say that's your baseline and you have documents to prove it, then that's sufficient for us. That is like a dream. So you need to do that. Go to CryptoTaxAudit.com/1099 and sign up for our safe harbor plan. It's free. It doesn't get reported to the IRS. We document that you adopted it before the end of 2024. It's yours, and we will, when you give us your email, we'll send you some additional instructions on how to take audits. We offer AMAs on how to do the manual inventory, and then what steps. How do you do your taxes for 2024? How do you do your taxes for 2025? And we are going to provide you guidance on how to use all the different services. But the most important thing I can just simply underscore is that unless you get a safe harbor allocation plan, all your prior tax returns will be treated as wrong because you weren't using the correct method selection and you were using a universal and not a by account method.